Bitcoin breaks 60K, breaking the lower low. Is there a path to 40K? Let's dive in and talk about it. Hey, howdy everyone. Tony here. Hope you're doing well. Today we're going to be doing the usual, starting with Bitcoin at the higher time frame here, and then work our way down to the current structure that we're dealing with now. Then we're going to check in on our correlated assets, that being DXY and ES, and see if they're going to be helpful or hurtful in this process of recovery or continuation. So I wanted to start out on the weekly, just looking at our price action chart. So as you can see on the bullish side here, in our price action, we had some corrections to the downside and swift moves up. And then eventually that ended up slowing down, and we ended up getting smaller and smaller swift moves to the upside. That's what I'm looking for over on this side. Right now, we still have swift moves to the downside. We want to see that slow down, and that shows some exhaustion on the bear side. So we're still not there yet. We still need some proof to see the bears getting tired. This could be the dump here that we get. Again, it's always good when we break a lower low. It gives us a nice anchor to use to kind of see where we are in the trend and in the count when we get to the Elliott Wave. So looking at the price section in the Elliott Wave eyes, a few things we can see here is one is this is a pretty large move and a pretty large correction compared to these corrections down here, which would lead us to believe that this is of a larger degree. And we can use this in our Elliott Wave to figure out where we are in that trend or in the count. So looking at this in Elliott waveform, because we think these are lesser degrees here, we can use this as our primary actionary wave, potentially, and then this as our reactionary wave. We can use this to project into the future where we think this correction is going to end or where we think price action is going to be going. So just looking at this in a sharp corrective style, we have to consider what we have here so we look at this as a 1, 2, 3, 4, 5 potentially, or as a zigzag complete. And then this would be our X wave or our B wave. And then we're looking for the same kind of price action we had up here. So if this is a double zigzag, A, B, C for the W, then we have the X, then we'd be looking for that same kind of price action to print out over on the right side in the A, B, C. We think this is an impulsive move. Again, would be a 1, 2, 3, 4, 5. B, 1, 2, 3, 4, 5. Along with that price action and just looking at the pattern that we're looking for in the secondary wave here, we would look at the fib projections. So in any sharp wave, we're measuring the first actionary wave here in the wave A or W, anchoring it off of our reactionary wave here in the B or the X, and we're projecting forward in time to see where we might land as far as the fib rejections may end up. Right now, we're still getting some clustering around the 50K area. We have 618, which is a target to look for. Most likely target, and what happens most commonly is the 1-to-1 down here. We're also going to put a base channel on this as well. And ideally, a correction will end near the end of this base channel, and we at this confluence in a potential bounce area for us to move and complete the correction. So the 1-to-1 and the end of the base channel end down here at 40K. So depending on how this plays out, we'd be looking for this to be a piece of confluence to look for a potential turn and end of this corrective move or sharp corrective move to the downside. Also in these corrective moves, we're looking for a little bit more complexity and we're looking for a little less slope as well. Again, showing the exhaustion of the bears in this situation and showing some more strength that the bulls can potentially take advantage of and move the price action up and away. And then we can always look at our momentum indicators as well to kind of see where we are. And all that can add up to a potential turn. And I think the most likely spot for that, if this is laid out correctly, is down at 40K. That's how we get down to 40K. But I do think we have some clarity down at the lesser degree here. So let's go ahead and dive into that now. All right, down here on the 4-hour, just a couple things I want to look at. One of them being what happens after the bounce completes. We're going to have a lot of people calling for the bottom and the bounce areas. Some of them are going to be right. Some of them are going to take a couple guesses and be wrong and lose some money. But I think the major thing we can kind of see from these previous dumps here is that we get a bounce up nice and quick. People who got it at the exact bottom, which is probably few and far between, are going to make some money nice and quick. But we always get a retracement afterwards, and that's going to be the telling portion. And what I'm looking for after this move down completes is, first of all, how big is the bounce? where does it come into play as far as the levels go and fibs and all that. And then I'll be watching for the retrace. So eventually, potentially, after a dump, one of these dumps, we're going to have a corrective move that doesn't just lead into a larger correction, but actually leads into a move up and out, and the bulls take over. So, a larger degree, this is what I'm looking for. We were on point again. We were looking for a C3 setup here, and that's the same thing I'm looking for the next time we end up bouncing, and what I'm always looking for after these swift moves, and especially a break of a lower low or a higher high, is that retracement for continuation, however fleeting, to the opposite direction in the form of a C or a 3. But because we ended up breaking this pivot here, I think we can cement in our count of this being a zigzag move, and now we're focusing on this section here. So zooming into here, I think there's a couple ways we can look at this. Again, we're always looking for anchors in Elliott Wave. Over here, the anchor was this nice zigzag. Here, I think we have a swift move that we have to contend with, and we have to figure out where we think this fits into the larger degree count. And on the chart here, I have the more extreme version of where we could possibly be. Again, we could put 1, 2s all on this, and then we'd have to find offsets for those 2s in the wave 4. So however many wave 2s we have up here, we have to find the equivalent wave 4s down at this degree, or down at this level as well. Now, when it comes to Elliott Wave, these moves, these swift moves, we call them extensions. They can happen in wave 1s, 3s, and 5s. They can happen in 2 waves. So the 1 and the 3 or 3 and the 5. But the most common position for these kind of extensions and moves in Elliott Wave is in the wave 3. So using that as our anchor, we can figure out where we are in the count. We do have a nice 5-wave move here in a 1, 2, 3, 4, 5. And if we go to lower degrees, we can see that momentum is giving us a divergence between these 2 moves. Now, just to cut to the chase, I think 65K is the level that the bulls have to beat at this point to knock the bears back. 69 is the main level where if we do end up breaking up above that, we'd have to reconsider and recount where we are in the larger degree count, just because this would be a little bit of a deeper retrace than what we'd be ideally looking for. We don't have a definitive completion here, so we could still be rolling over until we break this level at 64.5, let's say. We can conclude that, okay, at least the wave 5's done here, and then we're putting in a larger degree wave 4. So beyond all that Elliott Wave speak, basically we have some corrective moves up here, and we're looking to offset that down here. And 65K is going to be the level I think we're going to bounce off of if we do end up retracing back to it. As you can see, it's played as support in the past, so I do think if we end up coming here, it's going to be a rejection if we are in a wave for it, and we're going to continue down. If we do end up breaking above it, again, I'll be looking for corrective move back to it and continuation to the upside. But for now, just based off the count, if we do end up coming down here, and if this move down is done, 65K is the level of interest to keep an eye on. So because we have some of the lesser degree count coming to completion, potentially the way down to 50 from here before a larger bounce potential is coming in the form of wave 4, 5, 4, 5. And the more we break down, we should start seeing some more exhaustion on the bear side before we get a potential bounce. So last week and the last couple weeks, we're looking for this to play out ideally, where we could get a nice no-brainer entry into a short so we could ride this wave down. We were also watching the 74K level, and it couldn't even break above, and that was the primary level that the bulls had to break above before we got continuation down. And I think for this week, 65 is the level we have to watch. And if bulls truly want to take over, we have to break above that, flip that back into support, or start breaking this stuff up pretty violently to throw the bears back on their heels. Since we can also possibly be in a wave 5 extension here, the proof is in if we start breaking up above 65 and hitting 69, then I think that could be a possible 1 or A, B, or 2, and then we'd be continuing down from there. But we'll have to see how this prints in the upcoming days and week. But that's what I'm looking for here to play out on the 4-hour on BTC. Let's go ahead and check out the correlations and see if we're going to get some help or hindrance from them. All right, starting out here with ES and DXY kind of up side by side or mirrored. See that the pop off happened here at the same time. based off of news. I think the dollar was going sideways because it didn't know what to expect from the new Fed chair. But I think the news drop on Friday kind of solidified what the market thinks is going to happen now. Based off the numbers, it's going to send the dollar up, and we got to move up to the upside on the dollar, which caused ES this dump and I think exacerbate the move on Bitcoin because of the exhaustion on the TradFi. This was probably accelerated as well, just because we were in potential wave fives, or just because it is so extended on that side. But the main mover, I think, maybe it was a shock to the system, was the DXY to the upside, and that could have been the surprise that caused all the fear and the dump to kind of play out on the TradFi side and in the crypto side. So TradFi is feeling pain at this point, not as much as the crypto side, but we're going to dive in and look at where we think we are in these counts, which will transfer over to Bitcoin and crypto in general. So as you can see, the move on Bitcoin wasn't as severe. I think we were already dumping so hard here when the news kind of did drop. We didn't get as big of a move just because it's so beat up here. So I do think if we do end up bouncing next week or today when futures open, Bitcoin could see a nice bounce up. We'll have to keep an eye on our levels that we were watching, and we'll see. Hopefully, if we do get a nice bounce on the TradFi side, it transfers over to the crypto side and we get a nice bounce there. That hasn't been the case. Typically, Bitcoin has been more on the bear side of the correlations, where when price moves down, Bitcoin moves down in a more exaggerated fashion. And when ES does move up or bounce up, ES is lazy and doesn't move up quite as much. So with that, let's go ahead and dive into ES and DXY and see where we're at. So on the DXY, a couple weeks ago, we were using this impulsive move down as an anchor, and we were considering that it was a potential for a flat move here. And we were looking for this week to see how this was going to play out, if we were going to get a zigzag up and then a move back down to the downside, or if this was a flat, we were going to get continuation to the upside. And I think we have our answer here. And I think this may have us in a wave 3 on DXY as well. If we count this out, I think the closest pattern is an expanding leading diagonal and then an internal retracement in the form of zigzag, and we have continuation up in a wave 3. So if this is a wave 3, and if the news is projecting where price action is going to go and the direction it's going to go, there's a potential we're in a wave 3 here, and the most likely target for wave 3 is up at 100.50 level. So this week is very important as to where we think the dollar is going to go. If the dollar continues to the upside, of course, it's going to transfer over to the other side and cause some more bloodshed in the other markets. If we end up rolling over, and this was just all a knee-jerk reaction by the markets based off of the news and the numbers that dropped, we start rolling over, bears want to see a 99.52 level break, and we break back into this range high and find it as resistance, and then we continue down, and then we'll have to recount and reconfigure this whole thing. If we have seen some volatility where swift moves like this can be swiftly retraced, but typically when we break a high with this much amount of force, we're going to either correct back to it and continue up, or we're going to go sideways, consolidation, correction, and then move up to the upside. We did get this dropped on us on Friday, so we'll see how things react on futures open and on the US open on Monday. Those are the two things I'm looking at here. I think there is a potential for a wave 3 and continuation to the upside, and if that happens, then there's going to be more pain in the other markets. That's it with DXY. Let's look at ES. So looking at the ES here on a naked chart, of course, we can see we have a nice powerful move to the upside. Eventually, this thing had to start retracing. This could be it. I think we need to watch for a break of this pivot here. And that could potentially bring us back down to the 7K level for a retest on the bullish side. That would put us within the 50 to 618 area. And we have this nice resistance that could potentially flip back into support before we get continuation to the upside. Again, if we are done ski, we're going to break back below that, flip it into resistance, and then continue to the downside. So I think this is the main level to watch on the larger pictures down at 7K. That all starts with the break of this pivot here. When we zoom in and turn our count on here, we can see we had a couple clues that this could potentially be the top. We had a 5 wave move that we were watching for a move down for an internal correction. Hopefully it was for the bullish side between this impulsive range here, but we ended up rolling over and breaking some of the levels we had in mind. We were looking at this as the most likely target for a wave 5, so a lot of things are adding up that this could be a top, not the top, and we're going down to 0 by any means, but this could be a top. Because we broke the 75.5 level, we know we're in a deeper retracement, and then we'd look to a larger degree, which between this impulsive range here for a potential retrace. If these start breaking down, then we'd be looking at the larger degree retrace for this impulsive range and continue on as these pivots break. So as with Bitcoin, the swift move is going to be our anchor based off where we think we are in a count. It's pretty blatant where the count is if we think this is our wave 3, and that would be that we're putting in some kind of 1, 2, 3, 4, 5, and another. We've already been working on internal 1, 2, 3, 4, 5. And then even at the lesser degree, we have a 1, 2, 3, 4, 5. So I think not too hard to pull that out. And I think most Elliotticians will agree that's where we are in the count. Again, it was all news based and everything. And I'm one of those that thinks the news trumps all. So if this was just a knee-jerk reaction to the news that dropped on Friday, we could always just bounce right back up and everything would be nice and rosy for the bulls. But if we're going to base ourselves on these counts, we have to consider that we're not quite done yet. So since we have 3 wave 2s up here, we're going to have to offset those wave 2s with wave 4s down here. And I think the main level we have to watch is 74.08. I think that's going to be a bounce level and for continuation to the downside for the bears. If bulls can break above that and hit 74.54, things start becoming a little more sus as to where we are in the count. And it could just have been all a news-driven event here. And if we do end up breaking above that, on the bullish side of these levels, we need to break above these, flip them into support, and get some continuation and put those corrections to the downside impulsive range. If we end up breaking 73.55, that would give us a larger corrective move. The only other option I can see at this point is that we put in some kind of A, B, 1, 2, 3, 4, 5, and even then we'd still have some 2s to offset with some wave 4s down here. So I don't think the dump is done yet. Again, I'm only dealing with what we have printed and where I think we are in the count, using these as anchors. News drop and futures open can change all that. But for right now, I think the most likely path is down at the moment. Zooming back out, we're going to turn all of our drawings off. This is what I meant by the larger correction. So we would complete this impulsive move down, come back up, find this as resistance, and move down for a potential for an even deeper retrace down to the downside here. But again, all the AI bros and everybody could still be bullish and looking to buy the dip here, and we could end up just moving back up. A sweep of the low, kind of clear out any longs that are hiding back here would be a good liquidity grab for them. And then hopefully that would be enough to fuel it back to the upside. We're always looking for that impulsive move reaction and internal retracement. So whenever that presents itself, we have to consider that things are going to move in that direction. So that's what I'm always looking for if I end up being wrong in a certain situation. As always, I'm just rolling with the waves as they print. This move was definitely a powerful move. This was a move that we were looking for, even though we were hoping for a more prevalent retrace before the continuation. Just by having this as a potential pathway gives you time to prepare. And I think that's one of the most important things to be in the market is prepared. You're never going to know the future. You can only prepare for what may come. But with that, if you like the analysis, please give me a follow and a thumbs up and check out some of my other videos. You can also come check me out on the Discord, or you can come check me out over on X as well. Trade safe, trade clarity. Take it easy. Later.